Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today, as usual, we'll start with our Tesla technical analysis in light of the macroeconomics environment that seems to get everyone bearish and every stock seems to be bearish at this point. In light of the stock market condition, I would also like to share with you my strategy in real estate following Tesla, and that I will share at the back half of the video if you guys are interested. Without further ado, let's get right into it. But first, if you're new to my channel, I am a growth stock investor and a trader, and I'm also a real estate investor. I'd love to share with you my experience in both stock trading, real estate investing, if you guys are interested. As usual, fundamentally, this channel is still Tesla technical analysis, but I would very much like to hear your thoughts, since a lot of you out there have been asking me some of the questions around real estate in the areas surrounding Austin and where Tesla currently have presence. So I thought it'd be interesting to start gauging your interest by showing you my thought process around real estate investing in Austin. So let's start with the daily chart here. As you can see, on Friday, Tesla made a major move to the downside, and this is due to the overall macroeconomics environment where the US and the UK both urged their citizens to leave Ukraine in fear of a strike from Russia. And so that is reasonable that when the market generally is in fear mode, a lot of people will try to sell stock and resort to cash as safe haven. I don't know how bad the situation will be escalated over the next few weeks, and so it is really hard to say whether or not the pain has been contained. If anything, it might just get started. But looking at the daily chart here, you can see that last week Tesla had a indecision candle sort of jump out of the consolidation range here. That was a initial signal, although not confirmation, that Tesla could turn bullish. However, the day after, it did not follow through, and we completely lacked that confirmation. This is a failed rocket launch. Tesla also ended the day at $904 that day. And then subsequently on Friday, Tesla basically made a move to the downside, hit the next support point here at $853. The volume on Friday was 95%, so it is fairly decent compared to the previous days. If you look at the volume bar down here, as you can see that the last week Tesla did not hit average volume, with average being this yellow line here. But then on Friday, it hit that average volume, give or take, at 95%. So I think Tesla is now heading to the downside given this chart pattern here. Once again, I had hoped that it would break out of this consolidation zone and the symmetrical triangle with an upward movement, but it did not follow through. Right now, the 50 days SMA, let me adjust it here. It is at $993, so almost $1,000 for 50 days SMA. 100-day SMA is still around $967, and 200 days SMA is adjusted to roughly $823. So for as long as Tesla still move in between these two moving averages, namely the 50 days SMA and the 200 days SMA, Tesla is still in a consolidation zone. And if Tesla tips down below 200 days SMA, below $823, we're definitely bearish. Now, can we get there next week? Quite possible, right? Tesla ended the week at $860. That is only about $37, give or take, to hit 200 days SMA. I expect Tesla to bounce really hard at $823 next week. But if Tesla cannot hold $823, it is going to be bearish in the short term. Now, keep in mind, we are only in the middle of February, and the end of the first quarter is not for another month and a half. So the next known scheduled catalyst for Tesla would be the first week of April, and that is quite a long time from here. That said, I believe that Giga Austin is very close to getting up and running. As of the end of January, it has started to produce first saleable vehicle, and I'm hoping that it would start delivering both in the month of February and March, thereby pushing the overall production for the first quarter. Above all that, the macroeconomics environment right now between rising interest rate with a possibility of a double rate hike next week or when the Fed meets next. On top of that, we have the Ukraine war situation that is escalating very quickly over the last few days. It is a good reason as to why investors want to hold cash closer to their chest. So for now, I think the outlook seems pretty bearish. Looking at the weekly chart here, as you can see that the last week candle is pretty much a bearish engulfing on a weekly level. So the week before that, it was somewhat green, although it is still an inside candle from the week before, which was also very bearish. This past week does not seem to show bullishness, especially with the move down on Friday. Now, below $823, which is this red dotted line here, that is 200 days SMA, we have a very strong support, which is this white bold dotted line here at $796, and that is the 50-week SMA for Tesla. Essentially, it's a year moving average for Tesla. If Tesla loses both of these supports, we are looking at a very bearish next couple of weeks, and the next support below that is $738. Now, if you see that Tesla gets to below 825 and couldn't hold and did not bounce at $800, give or take, that is an opportunity to take all leap call options off the table. If you were able to enter any leap call option around 792 a few weeks ago, I think this is a good opportunity to consider taking it off, depending on the price action for Tesla. If Tesla does bounce on Monday morning, and if you are not greedy, perhaps it's also a good opportunity to take off your leap call options and short-term call options, because we kind of want to see what Tesla will do in the next couple of days. As I record this video, futures are not trading yet, so I can't tell if they're green or red. But even if they're green, I just don't have hope that they will be sustainable Monday or next week. So I will be very careful with any call options betting on the bullish side next week. If anything, puts would be a better and more viable choice at this point, given the macroeconomics environment. Looking at the hourly chart here, as you can see, the pivot points for tomorrow, Monday, on the upper end is around $900. The middle pivot point is $875, and the bottom pivot point is $811, falling right in between 200 days SMA at 823 and 50-week SMA at 796. So based off of this pivot point right here at the bottom, there is a good probability that Tesla would hit 200 days SMA tomorrow. And if it doesn't hold that and move all the way down to 796, that is a very dangerous move for Tesla in the subsequent weeks. So once again, I would be very cautious with any bullish bet out there, and I would try to take it off the first opportunity that Tesla bounces on Monday. There is no guarantee that Tesla won't bounce for good, right? But we are looking at the overall macroeconomics environment and the fact that Tesla is trying to touch 200 days SMA here at $823. I think we have every reason to be worried, and especially if Tesla hit 823 without bouncing with volume, then it is potentially crashing down further. This is not good news for the bulls, but this is also a short-term situation that macro needs to work itself out while waiting for Tesla upcoming catalysts. So we are now faced with the task of balancing between macroeconomics environment, rising interest rate, Ukraine war versus the upcoming catalyst for Tesla. Which one will be happening first, and which one has a much bigger magnitude that can carry Tesla one way or another first. And in the short term, in the next week or so, I'd say macro will probably win in this case. So let's zoom out a little bit on the hourly chart here. Tesla made a cup and handle last week. which theoretically it should have spiked further, especially with the jump and the indecision candle that happened on Wednesday of last week, I believe. But that did not happen, and now Tesla is tipping back down, making this cup and handle invalidated. So right now, I'm looking to see if Tesla would touch the 50-week SMA and whether it would bounce right there. Going back to the daily chart here, just to kind of take a look at the possibilities at this point. So you see that Tesla has multiple tops at this point. It is now at the bottom, at the base of the previous breakout. The previous breakout was right around October, and it was around 857 then. It is now at the base of that breakout. If it falls below 796, then we could get back to the 600 very quickly. If you recall, Tesla on the day that it was added to the S&P 500 in last December of 2020, it was trading at $695. So for all intents and purposes, Tesla has been going up for the last year and a half after the addition to the S&P 500. So as an investor, we can't really complain, right? The last movement has been very steep to the downside, but that doesn't mean that Tesla has not been appreciating. However, going forward, can Tesla get back to 695? Should we be putting our capital elsewhere, waiting for the next run in Tesla? That is always the question of the century. And if you are the diehard fan, the kind of investors that will put your money in Tesla for the next 10, 20 years and forget about it, regardless if it goes back down to $500, then that's excellent. If you don't have that kind of liquidity and capital and you want to see if there's better opportunity to put your money in a short term, I also consider real estate with using Tesla as a anchor and look for real estate around Tesla, particularly Giga Austin. So let me share with you my thought process there. So the general theory with me on real estate investment in the city of Austin is that when Tesla comes into town, it creates a gentrified effect for local restaurants, hotel, local shopping centers, supermarkets, and particularly housing market. When Tesla decided to move its headquarters from California to Austin, Texas, that also creates thousands and thousands of jobs in corporate headquarters, especially with Tesla being a growing company, right? So that also have a decent effect on the real estate market. A lot of this has probably been playing out over the last 18 months or so, but I still think there's a lot of opportunity in the near future for the city of Austin, particularly the area around Tesla. If you recall, in July 2020, Elon Musk indicated that the facility will be almost like an ecological paradise that will be open to the public. So that could create a lot of outdoor activities, a lot of natural environment for a lot of tourists and visitors, and thereby increasing the local real estate value as well. So this is the map of southeast of Austin, and this is where the gigafactory is showing right here. It is to the east of the 130 freeway and to the north of the 71 freeway, and particularly north of the Colorado River right here, if you see it, right? So what I'm looking for is housing opportunities around this area. Now, Austin, before the technology companies such as Facebook, Google, Apple, and now Tesla moving into Austin, the major development has been around the 35 freeway here. The west of the 35 freeway has a lot more housing development and has been more established than the east of the 35 freeway. So this area right here has not been as established, and Tesla is changing that dynamic, especially in the southeast. So if you look at it from the options trading standpoint, I think that southeast is almost at the money option, whereas if you go further out, east or south, that would be further strike, right, and further out of the money. Now, if you go on the west side of Austin, obviously it is in the money, in my opinion, and of course, there's also great opportunities there. I'm not so much into in the money options right now. I'm looking at slightly out of the money or at the money type option, and by that I refer to real estate around this location. Now, in the interest of full disclaimer, I already bought a few properties in the city of Austin or outside of Austin, so I'm not buying anything in the immediate future, but I wanted to share my thought process because I know that a lot of you have been asking me about Austin in general and what I think of the progress of the gigafactory as well as the real estate market there, so that's what I'm trying to share. So with that in mind, I'm moving over to Redfin to share with you my thought here. So Tesla facility is located, if you recall, east of the 130 and north of the 71, but also above the Colorado River, right? So it is right at this pocket right here. So it is slightly outside the area of the city of Austin, but if you look at the address, it is still Austin. So what do I see from here from a housing standpoint? There are a few different neighborhoods that are interested to look into, and you kind of have to know the market at the local level in order to understand why some of these markets have more potential than others. And, you know, as always, real estate is all about locations and subjective value. So it's important you do some research there. But I think one of the interesting neighborhood, something that I'm still exploring, is Del Valle. So Del Valle is interesting enough because it doesn't have great school, but it is growing very fast because of Tesla. A lot of people have been moving east as well. You know, a lot of people would be starting to go out further from the city of Austin in order to get better real estate deals. They can also go south, right? South of Austin would be the city of Buda or the city of San Marcos, and some would go as far south as the city of New Braunfels. Real estate investing is dependent on a lot of different factors, and one of which is interest rate. So without a thorough studying of Fed's action and how it interacts with real estate and interest rate overall, it is really difficult to analyze any real estate deal in a vacuum. So take my words with a grain of salt, do a lot of research. I'm happy to answer any question that I can since I have a little bit of experience in the Austin market area. I'm not a real estate agent or anything like that. I just wanted to share with you my honest opinion here. So if you look at this trend on the last 5 years, and if you look at Tesla announcing the Gigafactory July 2020, and so Austin has been stable up until July 2020, and it is starting to spike. And interestingly, even after Elon Musk announced the Gigafactory location, it is still spiking very little. And then all of a sudden at the beginning of 2021, just like the rest of the real estate market in the nation, Austin spiked at the crazy level, almost 20% within a short amount of time. And then it has since stabilized a little bit. Now, this I think is a dip that presents a really good opportunity to buy before the busy season start to hit again. So in a way, I think now, even though it's in February and it is at the foot of the next busy season, I still think it's a good opportunity to look at options. And so what are the options I'm looking at? So one neighborhood in particular that I'd be very interested in would be around the McKinney State Park here. So if you look at this green stretch here, this is McKinney Falls State Park, and these are the houses that spread between the 35 to the 183. These houses would be about 20 minutes from Tesla, and I think that they are positioned to grow fast. Anything east of Tesla will probably take a little bit more time to grow, right? You do have a few different cities here that is positioned to spike, but I think that staying closer to the 35 could also be helpful, but not too close to the 35, because then you'll be very far from Tesla right here and also have to pay a premium for a more established area. So I don't touch anything. So I wouldn't touch anything in the west of the 35. Again, this is investment property, not the properties that I would be living in. So there are a few units southwest of Tesla, but still southeast Austin overall. They should be located right south of the McKinney Falls State Park. And I think that will be a decent opportunity. Here's the airport right here. So this is to the southwest of the airport. The price point is ranging between in the high 300 to low 400, or it could get to about 500 depending on the areas. So these are houses that are decent in terms of cost benefit analysis as well as a return ratio. I don't look at new construction because as an investor, I don't think I can buy brand new construction in the city of Austin. But I'd definitely be considering anything close to the park with some sort of nature and within driving distance into Tesla. And so that has been generally my general strategy. If you guys are interested in more of my thought process here, feel free to comment down below and I'll do my best to add that content in my next video or even make a separate video. I'm not a real estate agent or a real estate guru. I just started real estate investing in the last few years. So I'm not one to say, follow me, but I definitely think that there's a healthy pool of Tesla investors out there that either look to diversify their Tesla investment in terms of stock. You can diversify into real estate, or there are just in general people that are interested in real estate investing and have been spotting the city of Austin for a little while, right? And I'd love to create an opportunity for all of us to exchange our thoughts together. So this is it for this video. I hope you find the information helpful. Comment down below if you like similar content on Austin real estate because of Tesla Gigafactory. But until the next video, bye.